recording before we start the lecture. Okay, so now, yeah, so the recording has started. So what I'm going to do is I come to the Zoho, I go to, hold on. So what I will do is I will go to the Chrome browser. When I get to the Chrome browser, from the Chrome browser, I'll be able to access Zoho Books. And from there, we can move along with the lecture. So let me also open the call so that whoever wants to join the call can always join the call without me having to access them to admit them. So I come to my Chrome browser, okay? Then I want to search for Zoho. I search for Zoho. So Zoho. So automatically, whatever account that you have opened in the last whatever, you have it over here. So I'll just click on this and it's going to load. So let's let it load. So basically, in the previous lectures, we've done a lot. We've done how to create our customers. We've also done how to create our vendors, right? So we've also done some transactions, like we've done the first invoice. We've gone to look at how to receive payment on the invoices. I also showed us how to also see, for example, if somebody withholds your money, like there's a withholding tax, I also showed us how to assess that. Okay, so over here we have the chart of accounts, and we've been able to finalize with certain things that are very important for the stuff. Let's also go and check the journal. Did you pass any journal the last time? Let's see. Okay, there's no journal at all that has been passed. So we come back to this side. Okay, we'll come back here because we want to like take some transactions and do journal entry for it. So let's go to the top. Let's see what we want to look at today. So let's quickly do some transactions. Let's do some invoices quickly. In case you're forgetting, we've done all these invoices before, but let's quickly do another invoice. So to do invoice, just come to your sales. Under your sales, you're going to see customers, quotes, invoices, sales receipts. In case you want to generate a sales receipt, here is where you can generate a sales receipt. Then you have recurring invoices, you have payment received, you have credit note, and all that. So now the reason why you can access all these things now is because at the first time when you click your Zoho Books, it's going to assume that, so it's going to give you like a free access to a paid version, thinking that after the plan gets to the stage where it's going to prompt you to go and subscribe, you're going to subscribe. But afterwards, some of these functionalities, you will not get them when the time comes. So until you renew it before you can see all these functionalities. So like you can see credit notes, you can see payment received, recurring invoices, sales receipt will always be there, customers will always be there, quote will always be there. So let's now, invoices will also always be there. So now we want to create a new invoice. We click on the invoices and now we want to create new. So if you create new, it's asking us for customers. So we have to impute the customer. So let's search for a customer that we want to use. So we only have like 2 customers here. In case you want to add another customer, you can easily click on the new customer button. So when you click on the new customer button, is it an individual? Is it a company? So what is the salutation? Is it a lister? What's the first name? Let's say Badmos. Okay, let's say Mr. Badmos. Mr. Badmos Yusuf. Okay, so Mr. Badmos. Oh, what's happening? I must have done something that is wrong. I'm coming. Close setting. Okay, so this is where we are now. So I'm trying to create a customer. So we just click over here, then we say want to create a new customer. And I said that this first individual, the salutation is Mr. And the name of the person is Badmos, and then the last name is Yusuf. Okay, fine. Then let's see what is the company name. We don't have a name for the company yet, but if you have a business, probably you might want to put the company name. Then if Mr. Badmos also works with the company, You can also consider putting the company that it works with, right? Then the next one, how do we want the name to display on Zoho Books? Do you want it to display as Mr. Badmos Yusuf, or in case there is the name of the company that we put, do you want to show the name of the company so that anytime we are trying to access Mr. Badmos, we always go to the company he works for. That's how we can get it. Then you can put an email address if you like. You can put a phone number if you like. Then customer's language, which is English. But if it's another language that the customer understands, you can quickly change the language over here. And then when you send that invoice to that customer, it's going to be in that language that the customer understands. Then the next thing is that this transaction, this Mr. Badmos Yusuf, do we always do a vatable sales to him, which is, let's say, yes, the company ID, the currency is Naira. If it's not a Nigerian, let's say it's another customer from outside the country, you can also select another currency for him that he needs to use. Then another thing is that it's going to be posted to account receivables, which is fine. Then the next thing is that because at any point when you raise or issue any invoice, it's assumed that the customer has not paid. So until you prove otherwise that the customer has paid, the customer is going to be created as a receivable. Okay, so any transaction for that customer is going to be posted to account receivable to show that this guy is still owing us. So now another name for debtor is now receivable. According to the new standard, they now call them account receivables. Okay, so then if this guy is an existing customer, probably you are importing it from another accounting software. Okay, you might need to have like an opening balance. Check the former accounting software that you have. How much was Mr. Badmos Yusuf? How much was he owing you? Okay, probably there are some invoices you issued to him. He has not finished paying those invoices. Then the value on that accounting software, you need to bring it here. So for instance, let's assume it's owing us a certain amount in the old accounting software. Bring out that opening balance over here, okay, to show how much is owing us. Then the next one, the payment term. How do we want to receive payment from this guy? Do we want him to pay it and on receipt, due on receipt? That means that we don't want him to owe us at all. Do you want it to be due on receipt, or do you want to do net 15 days, net 30, net 45, net 60, or due end of the month, or due next month? So anything you want, you can always put over here and it's going to be fine. Okay, so let's just put it as due on receipt. What does it mean? It means that anytime we issue any invoice to this guy, it's assumed that immediately he gets the invoice, he's supposed to pay us. So if he doesn't pay, it will be showing that his invoice is already due for payment. So that is what due on receipt means. But if you want to put net 15, it shows that in the next 15 days, that's when the payment will be due for receipt. Or net 30 days, in the next 30 days, or net 50, 45, net 60, and so on and so forth. So the next thing you have there is an enable portal. You want to allow this customer to have access to his account, probably when any receipt you send to him or any invoice you send to him. You know, you can always send him invoice by mail, right? So once you send him invoice by mail, probably he's going to get a link through which he can come and access his own details. But I'm sure with that link, this guy will not be able to do any editing to anything because this is our company. This is our company, right? Probably they can give him an access to make payments on his transactions or to view. He can also view his details or his transaction. Okay, so that is fine. That is that. Then you can do that. Allow portal access for customer. Then you want to upload any document, any file, you can do that. Then here we can click on save. Now you can see that today, as I'm creating the customer, I took my time to do a lot of explanation, things that I might not have mentioned in the prior class. So that's what I'm doing right here in this class. Then the next thing, you have your invoice number, which automatically Zoho is updating by itself. Okay, so this is the third invoice that we are issuing, and it's fine. If you have an order number, you can also put an order number here. Then invoice date. Today's date is 21st of February, but in case this invoice was supposed to have been issued, or let's say you have made a transaction to the guy before, Okay, probably you made the transaction to the guy on the 10th of February, but you did not raise the invoice on time. So maybe you just remembered today and you're raising the invoice. So you can backdate it to 10th. Just backdate it to 10th of February. Okay, you can backdate it to 10th of February and everything will be fine. So once you have done that, so it's going to tell you that there is this time. It's going to say invoice date is in the past. It's just like trying to prompt you in case it's an error you have made so that you can easily correct yourself. Okay. So it means that this our invoice date is not absolute. You can always change it. If today, like today is 21st, right? If you don't check it, automatically 21st is what you're going to see here. But you can also put the actual date that this guy ought to have received the invoice. Let's assume this guy ought to have received the invoice on the 10th of February. You can always backdate it to show the 10th of February. Then automatically it's going to be posted to account receivable, as I told us before. Then this transaction, who brought this customer? Do you have some marketers that normally go and source for these customers for our company? If there's a marketer, you can always impute, okay, in order to be able to keep track of the numbers of clients or the numbers of transactions that marketer has brought into the company. You are going to see what we call salesperson. So under the salesperson, you want to click it. Who is the salesperson? Is it Moses? Is it Sandra? Or is it a new person? You can always impute additional salespeople. So let's assume it's Sandra that marketed this customer, that made the customer start transacting with us, okay? So you just select Sandra. Then the subject is, let's say, repairs. So let's call this one repairs of motor vehicle, okay? Repair of motor vehicle. Repair of motor vehicle. So this is the repair of motor vehicle. Yeah, I'm busy now. I'll call you back. So repair of motor vehicle, right? So once you have repair of motor vehicle, then here you want to check here. Be mindful of this place. This place shows us, is this tax exclusive or is it tax inclusive? Always make sure that whatever you're selecting is always tax exclusive, so that the tax you want to be on the invoice, we now calculate separately, so that any amount you are putting is going to show the 100% that the transaction is. Then you now calculate government tax separately, okay? So that you calculate government tax separately. So what to now go all ahead and select the things I want to impute into the invoice. So this guy, he wants to repair his motor vehicle, okay? The motor vehicle brand can also be here, fine. Then you want to come to all these items. So there are 30 things you can do. If you come down here, you can add new road, or you can add items in bulk. So let's quickly click to add items in bulk instead of clicking one after the other. So the first thing you want to do is that the guy is going to do alignment. Okay, that is fine. We have to do alignment for his vehicle, or sorry, did I say alignment? Nah, not alignment. I meant to say vehicle inspection. So the guy ought to do vehicle inspection first. So he will have to do vehicle inspection so that we can diagnose the vehicle to get what the fault is for the vehicle. Then the next thing is we are going to get spare parts to repair the vehicle. And that thing we're going to do is that we're going to probably we might need to do wheel balancing and alignment for his vehicle. At the end of the day, we might need to also get a vulcanizer to work on his vehicle. We can also get take his vehicle to car wash after repairs for them to wash it. So that's what we call vehicle detailing. Then at the end of the day, we also will not do it for free. We need to collect service charge from this guy. Okay, so this our service charge contains those both the sundry and the procurement. So now this our vehicle workshop income. It warehouses three income. We talk about sundry income. We talk about procurement income. We also talk about service charge. So let me explain them. The first one, which I call sundry, is in case there's an emergency, there's a repair that comes up, because we've already issued invoice to the customer, then it will not be good that as we have issued the invoice to the customer, we are not telling the customer again that, this is your vehicle. There's another thing we need to repair. So those things get customers very upset, right? So we want to make sure that we keep aside contingency fund, okay? Contingency fund in case there is actually anything that comes up along the line, we can easily go back to that contingency fund to fix it from there. So that's what they call the sundry. Sundry is like contingency fund. Then, for instance, maybe the oil report is not enough or any other thing, you can easily touch the contingency fund. Then we also have procurement. So people that will go to the market, our procurement officer, probably all the logistics that he needs to use, okay, to go there, vehicle that will bring all the things that he bought and everything. All of them is going to be inside procurement. And then we have the service charge for helping this guy to fix his vehicle. So at the end of the day, you can see that I selected all these things as an item instead of me selecting them one after the other. So I just click on add item and automatically all the items have been added. Then the next thing I want to do is I want to check what is the prices. Okay, for this one, vehicle inspection and diagnosis have the price already. And then there's tax on it as well. Okay, somebody's hand is up. Yeah, quickly. So somebody said, let me check what he said. Sir, how do you join 3 items into one? Okay. Yeah, so we already know that we are tracking those 3 items into this place, right? So that is, I'm not saying that, I just know that once that is the way we decide, because we don't want the items to be so much. We don't want to have procurement fee separately. We don't want to have sundry fee separately. We don't want to have service charge separately, so that the customer might start asking questions that, why are you taking sundry for me? Why are you taking procurement? Why are you taking service charge? So we want to make sure that everything is made together. And then we now call it, what do we call it now? We call it vehicle workshop income, okay? So this way now is we are safe. It doesn't start asking us questions that, why are you taking service charge? Why are you taking for a procurement? Why are you taking service charge? Or, you know, some people will say, you're already taking service charge. Why are you still taking procurement? Why is taking this, right? So we just don't want that kind of argument. So we just merge everything together as vehicle workshop income. So let's now check all our details. Our vehicle inspection and diagnosis is fine. We already have a figure for that. Our inspection, okay, that is fine. Then for the other one, our spare part, let's assume that for this spare part that we want to work on this vehicle, we need a spare part that's worth 1 million, okay? So I also need to tell us how we actually do most of these transactions, right? For those people that want to go into this kind of business, most of these parts that you're seeing, this part that you're seeing like this, that I call 1 million, sorry, for those of you that take your vehicle to fix, let me just give you the expo. Most of the time, this amount is not 100%. This amount has been marked up. This amount can be like 170%. For you, you feel it's 100%, okay? So the actual spare parts that they are purchasing in the market can be like maybe like 700, and they are going to charge you, they are going to mark up that 700, they will mark it up by additional 70%. So you are not only paying the money, the original cost of the spare parts in the market, you're also paying extra money on it, okay? So just take note of that. So most of the items here are going to be marked up. Some of them are marked up by 60%. So meaning that most of the item you're seeing, this amount now may not be like just the 100%, maybe like 170% that you're seeing. Okay, so you also need to be conscious of that. Probably this training will also help you when you are bargaining with whoever is fixing your vehicle. Okay, I'm not trying to spoil business for people, but I'm just telling you the secret of the business. Okay, I'm just telling you. Okay, now once we have done this, okay, we have our wheel balancing and whatever. So we have this amount. So for this wheel balancing and alignment, we already have a vendor that we already make a bargain with that, okay, any transaction that comes in, we are going to give you 50%. So he does the work, we share the money, okay? So it means that out of this vehicle alignment and whatever that we are issuing, the guy will take 50%, which is 5,000, and we keep 5,000 to the company. Okay, yeah, everything is good. We are fine. Then we now have our vulcanizer income. Let's say this guy is collecting, let's say it's going to take 8,000. So all these figures are just assumed figures. Okay, they're just assumed figures. And don't also think that because I said they mark it up, that you now feel that is exactly what is done in where you repair your vehicle. Okay, we need to make sure that you understand what is happening in that kind of environment. Okay, so that is fine. Then the next thing, our vehicle workshop income. Don't forget that this our vehicle workshop income includes our sundry, our procurement fee, as well as our service charge. So for this one, let's just say this is let's just call it like, let's say this is 500K. Okay, 500K. So you can see that here, all the things that you have here, we assume that they are all 100%, right? 100%. That means that the VAT is going to be an additional 7.5% on it. So that at the end of the day, when we come to the government, we are not telling you the government story. We have collected our own money, which is 100%, and then we are collecting 7.5% for the government as well. So everybody is fine. We take our money, we smite to the bank, then we go and remit government's money to the government. Okay, everybody is fine. So that is that. So at the end of the day, you already have the total amount and it's fine. So make sure that at the end of the, you always put tax exclusive. It's very important so that the VAT will just be an addition on whatever you have over there. Then here, you can see this corner, they're asking you, I have received the payment. So if you have received the payment, I want to receive it 100%, you can quickly tick here so that you can say, okay, where did you receive the payment? What mode? Did you receive cash or did you receive it by bank transfer? What bank did you receive it? Maybe Fidelity Bank, then everything. But if you don't want to capture all the payment, let's assume there's a withholding tax that be deducted on it. Okay, we cannot do that here. Let's not receive payment here. So let's go straight to the bottom and save as draft. Let's save it as draft. Okay, so we've saved it as draft. Now the next thing you want to do is after you've saved that as draft, you now mark it as sent. Mark it as though it has been sent. The next thing you want to do is that you want to come over here and also now okay, we want to record payment. Let's record payment. So for this thing, let's assume that this payment that the person that is going to pay us is going to take away 5% as withholding tax. So let's quickly calculate how much is 5% on that value. So let's quickly do the mathematics. 10% is going to be like 16,804. Sorry, that's 16,000. Yeah, so it's going to be like 168,000. Yes, 168,042. So let's assume this guy took away 10%. Okay, so he took away 10%. So they're asking us that. So yeah, underneath here, you're going to see where you're going to say yes, tax was deducted as source. Sorry. So for this amount now, let's now check. Let's minus 10% from it. We now say 90 over 100 times 1680425. So that is going to be 1.5 million. So let's put 1.5, 1,512,382.5. So now what I'm going to do now is I'm going to say 10 over 90 for 90 times this same amount, 1,512,382.5. So 10% is going to be once. So now it's asking us now, no tax deducted. No tax deducted. But yeah, you're going to see yes, tax was deducted as source. So you now come to this place. How much was withheld? So the amount that was withheld is actually 168,042.5. That's what the amount withheld. So what account did they withhold the money? They withhold it under our, let's see, withholding tax receivable account. So this is it. So this is where it's going to be. Withholding tax receivable account. That's where they withhold the money. Then the date is fine. Then what mode did you? So is there any bank charges for this transaction? Probably when they paid you, maybe there's a bank charges, maybe they deducted you some money. But now our banks don't actually deduct money from us again when customer pays us money. It's only when we are paying money to customers now that they deduct money. But when customer pays us money, they don't deduct money from us. Okay, they only deduct from the customer. So no bank charges is here. Then here we want to come to how did we receive the money? What mode? We actually receive it by bank transfer. Then it was deposited to what bank? It was deposited to, let's say, our Fidelity Bank account. You can put a note here if you like to the customer. And after that, you are good to go. So this is the date of the payment, which is, it is necessary. You must put this figure here. Here also, anyone that you see that is red, you must put a figure there. Then when I go to the bottom and everything is fine, you want to save as paid. Now, save it as paid. Automatically, it's going to tell us that all the transactions have been paid for, because we're now seeing that, okay, the amount that was withheld is this amount. The amount that was made is this amount. So there is no balance any longer, because we have captured both the amount that was withheld and the amount that came in to us. So this is how to capture your invoice in case the customer withhold your money. So let's now come over now and let's work on purchases, right? So for purchases, let's capture some expenses. Let's come over here for some purchases. Okay, let's come to expense. When we come to expenses, the only expense that we can capture now is only cost of sales, right? So let's now come over here, and because we've not created expenses yet, okay, so we'll now come over here. The date is here. You can also do bulk. You can add your expenses in bulk also. Okay, you can add your expenses in bulk. So let's click on bulk to add our expenses in bulk. For instance, so let's let it load. Yeah, so this is a transaction. The first one is what date is the transaction? Let's click. Let's say the transaction occurred today, right? Then expense account. What account do you want to expense? You want to expense it to, let's say, the guy that does our wheel alignment, right? I told us that we have a 50% arrangement with him. So we click on cost of sales, alignment, and whatever, we balance it. Then how much is the amount we are paying to this guy? We are paying him 5,000, because the arrangement is that there's going to be a 50%, it's going to take 50%, and then we are going to take 50%. So pay through, we are paying it through, like, let's say I was the same Fidelity Bank. Who is the vendor? So this is where we now come here and now capture the vendor. Let's say the vendor is let's create a new vendor. Maybe Wasiu. Maybe there's a guy named Wasiu that does our transactions for us. So let's quickly call him Wasiu. Wasiu. Then what is his surname? Aina. So let's say Wasiu Aina is the name. Then how do we want it to display? This is it. Everything is fine. Everything is fine. Everything is fine. Okay, fine. And then we click on save. Now, if you have been owing this guy any amount before, because he's our vendor, right? Vendors usually have a credit balance. So if you have been owing this guy any amount before, under that place where you see you are creating the vendor, you can also see the opening balance over there, which you are supposed to also take note of. Then once you have done that, then who is the customer that we are repairing his vehicle that wanted us to involve this Wasiu Aina to do this thing? So let's come to our customer. I think the customer name is, who was the customer? Badmos Yusuf. That was the last person we issued invoice for. Then you can also select any project. No project is found. Fine. Then you now come over to the last place, and is it billable to the customer? Probably you want this. Maybe this is like a new transaction that the customer is just going to be updated about. You can click on billable, that means that it's going to issue an invoice to the customer. So we don't want to do that because we have issued a customer a invoice to the customer before. So no need to click on this billable whatever to the customer. Okay. Then let's quickly do other things also. Let's quickly check other things here. We also want to pick the same date, right? We want to select another transaction. So apart from rebalancing, let's say you want to do vehicle detailing. We are taking this vehicle for cars to go and wash it. Then we are paying the vendor that we are going to wash it from. We are paying him like, let's say, is it 8,000? So let's pay him 8,000. Then we are paying him to Fidelity Bank, right? Then another thing we're going to do is we are going to, who is the vendor? Let's tweak another vendor. Let's say his name now is this guy. Okay, this is the vendor. Then we are taking away this task. Then the same Mr. Badmos, his vehicle is what we're working on, and that is fine. We come over here, we create another transaction, we come over here, we say, okay, this date. Then here, we want to say cost of sales now. We want to go and buy the spare part. For the spare part, I think we charge him, was it not 1 million for the spare part? So let's say the spare part, we actually got it for 700K. Okay, we got it for 700K. And who is what bank did we pay through? We paid through the same Fidelity Bank that the money entered initially. So, Fidelity. I can't say the Fidelity again. What's going on? Fidelity Bank. I can't say Fidelity Bank again. Okay, so let me click away. Let me click again. Okay, I can't see Fidelity Bank again. Okay, let me just select anyone. Let's say Wema Bank. Okay, Wema Bank this time around. Then we come to the right-hand side. We want to click on another customer. So let's say it's this same guy that is supplying us all those things there. No VAT for this guy. Then we come over here. Is the same customer, Mr. Batmos, right? So it means you can also do mixture for if you are trying to also buy things for another customer. You can also create everything together. Okay. Let's say that it's not only Mr. Batmos that we are buying things for. Let's say we also want to buy things for another customer. We also come here, we select the same date, right? So we are raising it together at the same time. So let's say the vehicle workshop income we collected from a customer and the amount is, so probably when we got that vehicle workshop income, you know, I said that it contains your sundry, your procurement, and also your service charge. So let's assume that for this guy, there is somebody that we actually help us to repair something. Okay, we want to pay him from inside the sundry that we actually collect. So let's say we are going to give this guy, we're giving him 50,000. Okay, to quickly work on something for the customer, but we don't want to call the customer again because we feel that we have charged it into the other whatever. So we are paying from Fidelity. The name of the customer, the vendor that is working on it is this guy. Okay, we come to the side here. I want to pick another customer. So I want to know that we can actually mix up different customers' item, okay, and we can process it together at a go. So I think the last but not, it's much. Look at it. So let's just do the last one and know that we are done with this. So let's say the last one is this date. Another one we're working on is vehicle detailing, right? Vehicle detailing, we are paying 7,000 there for vehicle detailing. Then the bank you're paying it through is the same bank. Then we want to come over here for another customer entirely. And this time around is for, okay, so a vendor, right? A vendor, right? Fine. They'll come to the side over here. They want to pick on. We don't want tax for each of these transactions, no tax. Okay, so fine. Then over here now, we want to now put another customer entirely. So for this one, so you can see that at the end of the day, you can actually do plenty transactions together. Then if it's a new transaction that you just want to issue invoice to the customer, you can actually tick all these boxes, okay, so that the invoices will be generated to the customer. But otherwise, you can easily leave it the way it is. So you now come to save, you come and click on save, and automatically you have issued, you have done all these expenses right now. Okay. So any question? Is there any question? Are we together? Any question? Okay, if you are together, just give me a thumbs up. Okay, fine. So let's move ahead. Mute your mic. Thank you. Let's move ahead. Okay, so we come over here now. We are done with creating those things. So let's just quickly go and pass that expenses, that salary journal I said. So let's come over here. Let's assume that, let's come here, let's click on journal. So we come to accounting. Once we come to accounting, right, we come to manual journal. Okay, so when we click on the manual journal, we now click on create new. So because this is the first journal we are creating, it's going to call it journal 1 automatically, and then you cannot edit it because they are the one that keep tab of your journals, right? So they say that this is the first journal you are creating in this account. So if you like, you can put a reference. If you like, you can put a note, a description. So we can say salary, let's see, salary control account for February. Okay, so salary control account for February. So we can always select accruals and cash. Always select accrual and cash is fine. Then for the currency is Naira automatically. Then we now come to the bottom here, want to start our whatever. So before we do this, in order for you to know that I'm not doing this in isolation, right? Let's go to our chart of accounts that we have in that our whatever. Let me check for the chart of account. Okay, so the chart of accounts, I'm looking for it right now. Chart of account. Oh, it's not here, so let me close this. So let's search for chart of account here. So go like charts of accounts, and here we go. So let me see whether this is going to open well. Okay, I think it's good. Yeah, so let's open it here. I think this is a new chart of account, which I might need to open another one. So this is not the chart of account I am actually trying to work on, because at the bottom here, I want to see the journal entries that I've passed. This is what I actually did that we use for the training, but this is not what I want to work on. So let me go back to the search and search for chart of account again. Charts of account. So I want to check for Zoho Book chart of account. So here, I want to open here. All right, so let's open this like this. Yeah. Okay, so this is what we have. So let me click on just this one. Yeah, so if you look at this journal entry, last time I took my time to explain to us this journal entry, right? I took my time to explain to us. I told us that go and take your gross salary. Your gross salary is what you're going to put here. Once you put your gross salary here, which is going to be under your admin salaries and allowances. So this gross salary that you are debiting is going to the profit and loss account, okay? It's going to be expense to show that we've actually catered for salary for the month of February, even though we have not paid them, okay? We have not paid it. Now, what is the breakdown of the salary? So this salary, what make up this gross salary is, number one, the net salary that we're going to pay to staff, which is always under accruals, salaries, and allowance payable. Then apart from that, we now have the tax, which is a pay that we need to pay to the government. No, sorry. Yeah, that we need to pay to the government. Then we also have the pension that we need to pay on behalf to the pension PFA on behalf of the staff. Don't forget that this pension that we always have here is always going to be the 8%. So to get the 10%, just say 10 over 8 times this value. You're going to get the 10% that the employer is going to contribute. So this thing is what we're going to use now for our journal. Our journal. So we felt about did it on this place. So what we did is that the first thing is this admin salaries and allowances. Okay, this is a gross salary, which was expense to the POL account. Okay, we're going to create the journal. Okay, once we create the journal, we debit it. It's going to go to the POL account. Then the next one, all these credits you are seeing, all this one will go to the balance sheet. They're going to be like liability until we pay them. They are going to be liabilities until we pay them. Okay, so that's it. Then in the POL account as well, you also go and expense the employee's part of the contribution. Now, even if the employer has not paid, even if we have not paid the salary, we are only creating a provision. So you must not wait until the salaries are paid. Every month, go and create salary provisions. Go and pass journal. Provided you know the salary, the gross salary that they're going to pay in the month, you also know the breakdown that they're going to also create, that they're going to break down that gross salary to. Go and pass your journal. Go and do your journal every month. Okay? Go and do your journal every month, right? Probably towards the time that the salary schedule has been finally prepared, that you know that there's not going to be any changes any longer. Go and pass your journal. So let's go and do our journal. So remember, this journal now is just like we are creating a provisions for salary. It doesn't necessarily mean that salary has been paid, because you can see obviously we are creating a liability at the same time. So as we are creating an expense in our POL, we're also creating a liability in our balance sheet to show that this amount that we expense to the POL is just a provision, so that we will know that this money we need to set it aside, so that when we are declaring our profit, this money will not be part of the profit. We have catered for salary. Okay, so our profit that we are going to declare to government can easily deduct whatever tax they want to deduct for it. So this is just a provision for salary. Though the tax man is still going to disallow it, any provision that you are creating that has not actually crystallized, the tax man always works on cash basis. They don't work on assumption. They don't believe in creating provisions. Okay, even though you created provisions for salary, accounting wise, it is allowed. Okay, as an accountant, following the accounting rules and regulations, you are allowed to create provisions, right? Okay, but the tax man is still going to disallow it. At the same time, you also created a liability in the balance sheet, which to the accounting rule is fine. Okay, but the tax man is going to disallow this. Taxes are paid on cash basis. So let's go to our whatever. Let's go back to it. So we come over here. We want to now start creating our journal. Okay. So the first thing we're going to do is we want to create the gross salary, which we debited to POL. So let's go and look for admin. Let's click on admin, employee contribution, admin salaries, allowances. So let's click on admin salary allowances. Fine. So this is the account. Their warehouses, the gross salary. Okay. So when we come to the description, we say, you know the way they do journal now, the gross amount of salary for the month of February. Okay, so that is that. Then contacts, you don't need all these ones. Select contact, you don't need all these ones. Account type, let's check for the account type. You don't also need all these ones. Okay, you don't need to show whether it is sales or purchase. No, you don't need that. So we'll come over here. It means that for your purchases and your sales, you can also use journal to pass them in. Okay, you can also use journal to pass them in, but that's not what we want to do here. We're not doing anything into purchase or sales, okay? And we're not doing a normal expense. We're not doing a normal expense, right? So you now come over here, you now come to naturally, you cannot select tax on this stuff, right? You don't pay tax on them except pay. So when I come over here, this is where we're going to put the amount. So let's come back to our journal, right? We come over here. This one we want to select. We copy this, Control C. We copy it, and we come back to this our this stuff, right? When you come to this place, you want to put it over here. Control V. Oh, sorry. What did I just do? Okay, so yeah, okay, so that is that. We've created the first one. So the next thing, you can see that here, we're already having a difference because we've not passed the other leg. We've posted the debit side. We need to now pass the other leg to make it balance. So the next thing we want to also create is we want to now select the net salary. We have taken the gross salary, the gross amount. So let's not take the net salary now. It's going to come to our accruals. Remember, it's our accruals because we have not paid it, right? It's going to come to our accruals, the net salary that we ought to pay to staff. So this is it. It's going to be accrued salaries and wages. Description being the net salary payable for the month of February. So for the month of February, so you also come over to where you have your, also come over to where you have the figure, okay? And now we have created the gross salary. The next thing is I want to now start passing our credit entries, right? So where is that place? Yeah, so I think this is the place, right? You want to start passing your credit entry. So let's go and copy our figure. We come over here. This is our net salary over here. We copy it, and then we say Control C. We bring it back over here, and then, bring it back to this, our whatever. Yeah, so bring it here, and want to put it over here. So it's important that I show us this, so that when you now come to doing your depreciation and every other thing, you also know how to treat it, okay? You also know how to actually treat your depreciation. Then the next thing we have done that, right? We're not done. We still need to also have, we need to have, it's not balanced yet. Do we still have a difference? So let's click on enter. Let's see. Oh, please ensure the debit and credit are equal. So you can see it's not equal yet. So you come over, now we have a difference, right? So let's now create another, let's add another row. For that row now, we are going to get the payee that was deducted. So let's look for payee. So do we call it payable? Payable. So what is that payable? The payable is actually not pension this time around. Okay, no pension, withholding tax, not withholding tax, not VAT, not trade payable, not pension. Let me go and check the name I called it. Why am I not having that account here? Let me check. I called it payee tax payable. Did I actually create this? Payee. Okay, pay as you earn. Let me go and check pay as you earn. Let me go and check. I think I called it pay as you earn. I think that's what I called it. So I come over here. I want to search for pay as you earn. So let's check for pay as you earn. Yeah, so this is it, pay as you earn. So that's what it's going to be. So how much is our pay? Our pay as you earn is going to be how much is 190. We copy 190 over here, copy it, Control C. We come back to this place. We want to put our okay, the description, the payee on February salary. February salary, okay? The payee on February salary, okay? So when I come over here, want to put the figure, is also a liability. We put it over here, right? So I think the last thing is our pension. We come over here to pension. We want to add another line. And here we come and look at pension. Pension. Okay, so this pension. So after you look at pension, so pension payable for February. So you now come to the side over here. You want to actually select, put the amount. So let's come over here now and check. So we come over here and then want to copy this. So at the end of the day, after we finish copying, we want to check whether it has balanced, right? We want to come over here and check if it has balanced. So let's come here and Control C. At the end of the day, you can see at the bottom, it has actually balanced, right? It has balanced. So you can go ahead and save and publish. So save it and then you also publish it. So don't save it as draft because it has balanced. So just save and publish, and that is it. Then the next one you want to do is that let's now create another one, additional one. So our class is going to be very short today because once we finish creating this last one, we might call it a day for today because it's going to be very short today. Actually, probably we'll continue tomorrow, and we will do more tomorrow. So let me just create the last this last one. Okay, well, let's create the last one. So we are creating the employee pension contribution, which is going to be this value. We copy this one like this, Ctrl C, and then we'll now come back to this place and let's see. Reference is fine. Everything, you can put any other thing you want to do. Then for here, let's just go and create our. I think it's also going to be admin because this is going to be the debit aspect, which is going to be admin slides payable, admin employer pension contribution, which is fine. Then you can put the description here, being the 10% pension contribution for from the employer, sorry to say, from the employer. Okay, so at the end of the day, come and put the amount inside your debit because this is going to be debited to POL. Okay, as a provisions, it's going to create an expense in the POL like a provisions. Then at the end of the day, you also come and create your liability on it. We also come here. It's okay, the same amount for the liability. So let's come over here and select the liability account. So we're going to select payable. I think it's going to be pension payable. Let's see. Oh no, sorry. Supposed to check the drop down. Okay, so not there. Here. So we say pension. Oh, how am I not getting what I need to get? Okay, I'm coming. Let me check for the drop down. Yeah, so let's now search for pension. Pension. Yeah, so this is the pension payable. Then we also want to get the same description. They want to come to the end. They want to put it as a liability. Okay, so as a liability, we put it over here and Control V. At the end of the day, everything is going to balance. There's no difference. They can go on to save and publish. So tomorrow, so it's telling me something now. Say note feed cannot be left empty. So the note feed, yeah. So yeah, so we can say we can say that the 10% pension contribution from the employer. So we are done with that. So we now click on save and publish. So from here, we're going to continue tomorrow. Thank you, everybody. Today's class is going to be very short. Sorry for that, but tomorrow we are going to make it better. So from here, we're going to continue tomorrow. And do have a lovely night, everybody. Thank you for joining.